The energy transition is the shift from burning fossil fuels such as coal, oil and gas to cleaner renewable energy sources such as hydro, solar, and wind. Nearly 200 countries have committed to substantially reducing greenhouse gases. This means there will be greater and greater demand for clean power in the future. We believe this will be a big opportunity for investors. With improvements in technology, renewable power is becoming more and more cost-effective and efficient, and this will happen with or without government support. Governments are changing regulations like higher fuel efficiency for cars, banning internal combustion engines, having higher building standards to improve energy efficiency. So in Europe, there's been cap and trade for carbon, and in Canada, we have had carbon pricing. So the US is spending about $500 billion, and in Europe, they're spending about $2 trillion, or 30% of the EU budget. It took decades for the world to build our current energy infrastructure, so it will take decades more for us to transition. That's why a lot of these net zero targets are so far out, 2050, 2060. It will likely take even longer. It takes a long time to build power lines, power generating stations, electric vehicle networks, and mines that you need to build wind turbines and batteries. Cars on average last over 12 years and ships over 20 years. We still need more technological advances to improve batteries, energy efficiency, and to capture and store carbon. On top of that, affordability and reliability are becoming increasingly important. So most renewable energy is dependent on the weather. So if the wind doesn't blow and the sun doesn't shine, there's no energy. We need it to be constant and reliable. Some industries are very difficult to decarbonize. So heavy industries such as iron, steel, and cement are very difficult because they actually use carbon in the process. So some transportation industries like heavy trucking, planes, shipping are also very difficult to decarbonize. We either don't have the technology or it's not scalable. There's more to investing in this theme than just buying the companies that make solar panels, windmills, and electric vehicles. We believe that there's opportunities throughout the entire value chain. There's opportunities in the energy infrastructure space, such as Constellation Energy, which is a big producer of nuclear, wind, solar, and hydro. NextEra, which is a utility that generates the most power from wind and solar in the world. Williams, which has a big network of natural gas pipelines. Qantas is a construction company that specializes in building renewable energy projects. Prysmian, that makes the cables that connect offshore wind turbines. Hitachi produces equipment for electric grids, batteries, EV charging stations, and other electrical components. The energy transition is very metals intensive, so mining companies are another way you can benefit from this trend. So far, we've been going through a very disorderly energy transition, and there have been times when supply and demand have been out of sync. Some examples have been when Russia invaded Ukraine and the gas supplies were cut off. China is producing too many electric vehicles, and we currently have too much lithium. It's very important to understand where we are in the life cycle of investing. So some of the energy transition is in its infancy and some is more mature. So a good example is if you're building a power plant. In the beginning, the engineers make money, then the construction companies make the money, the electrical companies, and then the utility or the power producer will only make money at the end when it's built, and that could be many years. Therefore, active management can add a lot of value. Brompton offers two ways to invest in the energy transition with active management from our experienced team. The Brompton Global Infrastructure ETF, ticker BGIE, invests in growth opportunities for infrastructure such as energy transition, government investment, and digitalization, AI, 5G cloud computing. The Sustainable Power and Infrastructure Split Corp, or PWI, on the Toronto Stock Exchange also invests in energy transition and infrastructure themes. The fund's Class A share offers enhanced return potential and high monthly distributions. Visit BromptonGroup.com for more information.